When you hear foreign direct investment, what comes to mind? Big companies, foreign dollars, maybe even economic growth. But beneath the surface, FDI, is it more than just money crossing borders? Is it about influence, ownership, development, and sometimes dependency? In this episode, we untangle what foreign direct investment really means, who benefits, who doesn't, and why it remains one of the most debated tools in global economics and national development. Welcome to Untangle. I am Amadine Ogbewe. All right, welcome back. We've been joined now by an expert in the matter. He's a chartered accountant and business intelligence consultant with 21 years unbroken or over 21 years unbroken oil and gas industry experience. We're talking about Mr. Nick Agule. Welcome to the program.
Thank you very much, and I'm happy to be here.
It's good to have you. We like to carry everyone along. So basically, what is foreign direct investments before we move into the more technical aspects?
So in a nutshell, and in plain language, foreign direct investment is investment that come, let me put it in a very basic way, is a foreigner that brings in money and invests in a country, and that investment should be on a win-win basis. And what do I mean by win-win? It should be helpful to the country that is receiving the investment, and it should also be helpful to the foreigner who is making the investment.
I don't know if you can go into a bit more details. When you say investment, does it mean a foreigner brings in money to invest in a company that is already in the company, or are they starting from scratch?
Okay, it's very good to make that distinction because we actually have foreign direct investment and foreign portfolio investment. So foreign direct investment is for the long term, while foreign portfolio investment is for the short term. So what do you do with foreign direct investment? You come in and you build a business. You spend money. If it's like a factory you want to construct, you spend money to get the required approvals. Then you put money in building the factory, and then you run the factory. And the factory produces goods for the nation, which you can also export. You employ people. You pay taxes to the receiving nation. At the end of the day, you are hoping to make a profit, which you can then repatriate back to your country. So that is how it works. So foreign direct investment is for the long term, and foreign portfolio investment is for the short term. Short term in the sense that you can just come in and buy treasury bills. 30-day, 60-day, 90-day treasury bills. You can buy bonds. You can buy shares in the market. You are basically trading in the money market. That would be foreign portfolio investment. You are still bringing it to dollars, but you're not putting it in long-term projects. So typically, like in Nigeria, to give an example to help our viewers to really situate this, like the international oil companies that have been investing in Nigeria since the 50s, that is a classical case of a foreign direct investment. So they brought in money into Nigeria. They brought in the technology and the expertise. We had no knowledge of oil exploration. We didn't even know that we had oil in Nigeria. So they brought in these resources. They explored for oil. They found oil, and then they brought in more money to develop the fields to be able to produce the oil, and then they started to produce the oil. And since they started to produce the oil, like I said, this is a journey that started in the 50s. In fact, Nigeria's first discovery was around 1956, where none of us here were even born yet. And these investors are still here with us in Nigeria. So you can imagine how long they have been here, right? They've been here even before Nigeria became an independent nation, and they have been with us. And the consequence of what they are doing, which is the foreign direct investment they are putting into the Niger Delta to explore and produce crude oil for us, is funding over 90% of our budget. Over 90% of Nigeria's budget is coming from crude oil activities, which these investors brought to us. They have also been taking crude oil out, a lot of it, because of their own investment. So this is where I said it needs to be a win-win relationship, where the receiving country benefits and then the investing country also benefits. And like your question, is it foreign direct investment if it is a fresh investment or you are buying into another entity, an existing entity? Either way is possible. For instance, if I stay with the oil industry, the IOCs have come in, they spend their money on the long term to do the oil industry for us. If today another IOC decides to come in and maybe buy off the shares or the equity or the business from an IOC that has been with us, it's still foreign direct investment, because that IOC is still going to bring dollars into the country. So it doesn't really matter whether you are coming in to start afresh or you are coming in into a brownfield and you are getting into business that is already existing.
All right, fair enough. So when we talk about these investments, who can do it? Can governments also invest in other countries, or is it only business organizations that can go to other countries?
Either way is possible. It depends on what's on the table. Who can do foreign direct investment? Can be individuals, can be corporate bodies, can be governments, or can even be non-governmental organizations. And have we had cases like that? Yes. If you look at the Chinese investment, like in Nigeria, the Chinese companies that are investing in Nigeria are mostly government-owned companies. Yeah, the China Construction Company, the CCCN, and all of that are building airports, building rail lines, building roads, building all of that, are being sponsored and operated by government. And we've had the telecoms, for instance, in Nigeria. The MTNs and all of that, they were private setups that also came into Nigeria. So either way is allowed, so long as that investment meets with the regulations in that country. It qualifies as a foreign direct investment, regardless of who is making it.
All right, fair enough. Are there any issues of perhaps questions of sovereignty here? The things you mentioned, railways, airports, those are key infrastructures. So is there ever a concern when it comes to FDI that another country could invest in these things in a separate country?
Yeah, so you are quite correct. FDI motives can simply be a business or government looking for diversification of their portfolio, and they're investing in another country where they see opportunities are there. But there can also be political undertones to it. And that is why the receiving government is the one that is expected to look at that foreign direct investment and decide for itself if it is for the benefit of their own countries. And if it is not, or they foresee a risk to a threat to sovereignty or some other underhand dealings, then it behoves on them to be able to perform their regulatory role and take out that or refuse that foreign direct investment from landing. So I cannot sit here and say it's all about business and there are no other motives. There could be other motives, but the receiving country has responsibility to be able to determine that.
All right. You mentioned already that it should be mutually beneficial, I understand. Yeah. But is there ever a time where we can say one party is usually the one that benefits? The investor or the country that is having that investment being brought to its soil?
Yes, I don't think is a 50-50% relationship.
So one party
It's
benefits
difficult
more.
to have it as a 50-50% relationship. So it depends on also the negotiation that takes place, right? So for instance, I can give you a very good example now. In the oil industry, and I'm using the oil industry because that's where my expertise is. When the foreign direct investors first came, the Nigerian government insisted on investing with them, right? And that's what we call joint ventures. So the Nigerian government went into joint ventures with these international oil companies to say, if you are going into that field, I'm going with you. And if you look at it in practical terms, you will see like the Chevron Nigerian joint venture is 60% Nigeria, 40% Chevron, right? The Shell one is 55% Nigeria, 30% Shell, 10% F, and 5% Agule. The mobile one is 60%, 40% in favor of Nigeria. So Nigeria then puts money into the investment. So if they want to spend $1 billion, if it is the Chevron joint venture, Nigeria will bring $600 million and Chevron Corporation USA will bring $400 million. They put in. And if they produce 10 million barrels of crude oil, Nigeria will lift 6 million barrels of crude oil and Chevron Corporation US will lift 4 million barrels of crude oil. So that was the arrangement that Nigeria did at that point. Fast forward to the early 2000s, Nigeria changed strategy and said, I'm no longer going to go in with you again. So the new blocks that were allocated from the 2000s coming forward are mostly on what you call the production sharing contract. They are called the sole risk, where Nigeria sits like this and allocate the oil block to the international oil company and say, you go. So the international oil company puts in their money 100% to explore for oil in that block. If they don't find oil, tough luck. Nigeria will say, I'm sorry, right? If they find oil, then they come back to the table to discuss further with Nigeria. So basically, in a technical term, Nigeria will give them an oil prospecting license. Yeah? OPL, go and find the oil. If they find the oil, they now need an oil mining license, OML. Then Nigeria is going to have a discussion with them. You see what we're going to do for you? The cost that you put in to do the exploration will let you take some crude oil over time. That's what they call cost oil. And then you pay taxes with, oil, so all of your royalties and all that, you also pay to us as a government with oil. The balance that is left, which is the profit oil, is the one that will now be shared between the foreign direct investor and the Nigerian government. So you can see this kind of arrangement. There is no one type of arrangement. And in this arrangement, you can't say who is the beneficiary, a better beneficiary than the other. However, under normal circumstances, the receiving country should benefit more. You know why? Like we're talking about a joint venture. If you produce 1 million barrels of crude oil, if Nigeria takes 6 million and Chevron takes 4 million, even if it was the other way around, that Chevron took 6 million barrels and Nigeria took 4 million barrels, Nigeria is benefiting in other ways. What are the other ways? These foreign direct investors are paying taxes to Nigeria. They are employing Nigerians, right? They are building assets in Nigeria. Whatever they do in Nigeria, they are not going to take it away. The international oil companies are not going to ever pull out the oil wells they have developed in Nigeria and take it back to their home countries. They are here permanently.
But they'll take the profits away.
Just so we're talking about who benefits more.
Okay.
So what we're saying is that even if the international oil companies are taking a major share of the profit, Nigeria is benefiting in other ways because the assets that they have come to construct is permanently in Nigeria. It can never be taken away.
All right.
Right? And of course, Nigerians are working and the businesses in Nigeria are running because of the oil industry. Nigerian business, doing all sorts of supplies to the oil and contracting and everything. And they are building assets in Nigeria. If you go to their estates, you go to their offices, you go to all of the kind of things they are doing, are all being constructed in Nigeria. So if you aggregate all of that,
the host country benefits.
The host country should benefit more than the foreign direct investor.
All right, please hold that thought. We'll go on a quick break now. When we return, we'll delve into further aspects of FDI. Don't go anywhere.
Culture connects us beyond borders. It's a bridge between traditions, creativity, and the future.
Culture is alive, shaping identities and communities every day.
Art tells stories of resilience and vision.
Artists blend tradition with innovation.
Cultural preservation creates sustainability and empowerment.
Culture evolves and adapts.
Music and dance unites communities through movement.
And right here, in the heart of our cities, artists and creators are keeping these cultures alive.
On Culture Cove, let's explore,
celebrate, and preserve the arts and culture that define us. Welcome back. We're still talking about foreign direct investments, and I still have here with me Mr. Nick Agule. So let's move swiftly to an important question I always ask. But let's just get it out of the way now. In your opinion, what would you say is one of the biggest misconceptions about FDI? Something that people tend to get wrong about what the concept is?
I would think that the biggest misconception for a lot of people, what's in their mind against FDI will be the loss of control, the loss of sovereignty. Some will even see it as neo-colonization and all of that, which are valid concerns, I would say. And like I said before, it behoves on the receiving government to be able to figure out if these guys are coming with good intentions or not. And that is why, like in Nigeria, we have the intelligence community. It's a big community. It's made up of the DSS, it's made up of the Defense Intelligence Agency, the Military Intelligence Agency, all of the armed forces have their own intelligence agencies, the police have their own intelligence agency, there's a national intelligence agency, there's a national security advisor. There are all of those things that the intelligence community. It's their job to protect Nigeria, whether through the intelligence side or physically or anything. It's their job to protect Nigeria. And they need to appraise the foreign direct investments that are coming into the country to be able to figure out what the motives are. But I would say that it depends on the investor.
All right, so that makes a whole lot of sense. So let me put something else towards you. If you can confirm or debunk it for us, there is an idea that FDI doesn't just go one way. It is not just developed nations and the global powers investing in the developing nations and so on and so forth. So what do you say to that?
So for the majority of cases, FDI moves from the developed nations to the developing nations. And the reason is simple. The developing nations are still developing. They need infrastructure. The opportunities to invest are higher than saturated economies where you can really invest in anything. Like a company that wants to invest in the rail services, in a place like the UK, where else can you invest? Because the whole country is already covered with rail services. But when you look at Nigeria, you discover that in the entirety of Nigeria, of 36 states and the FCT, you can only connect the Nigeria's federal capital, Abuja, with one state capital, which is Kaduna. 35 state capitals are waiting to be connected to the federal capital. That is the opportunity they will see. And that's why they will come. So that is why, for the majority of cases, the investment is flowing from the developed to the developing. More so that the developing don't have the capital base to even do these things. And that's why it comes that way. But FDI also moves from developing to other nations. It actually goes from developing nations to developed nations. And if you look at the banks, for instance, there are Nigerian banks that are now set up that have set up in the US, in the UK, in China, in all of those kind of places. That is FDI moving from Nigeria to the developed nations. And then a business like the Dangote Group, setting up factories in African countries and all of that. So that's the flow of FDI. And that is helped by globalization, which is the new age that we're in now. And the capital is flowing across borders without hindrance, except, of course, if there are trade barriers and things like that. Otherwise, it's also possible with the examples I have given.
And also from developing to developing, right?
You can move from developing to developing, like we have Nigerian banks that are in Ghana, in Togo, they are in Ethiopia, in Uganda, and all of that. That is developing to developing. Dangote cement in East African countries, developing to developing. And if Nigerian banks are in the United Kingdom and the US, is developing to developed. So he's moving across, but I think the bigger quantum is from the developed to the developing.
All right, that's fair enough.
Yeah.
Let's talk now about when we talked about the benefits that, there were some perceived disadvantages, so to speak. There's a particular issue that people have, that FDIs, they have a lot of influence in aspects other than just business. So we have where an FDI has a sector. You've been talking about oil and gas.
Yeah.
We'll see some of these companies pushing for either policies or sometimes lobbying for laws that will make perhaps their business smoother or work better, all of that. Sometimes we have issues of environmental concerns, and then you see FDIs pushing initiatives to do that and all of that. So what is the influence of these companies on other countries, outside of the business that they came for?
So lobbying is not it's not a crime. I was actually at the UK House of Parliament, and I was shown how the word lobby was coined. So if you go to the House of Parliament in the UK, there's a long corridor. And when the members of Parliament, which are the legislators, when they have tea break or break time, they come into that corridor. And then there are people who come from outside of Parliament to meet them in that corridor to seek for one thing or the other, either for themselves or for who they represent, or companies or countries or whatever. And that is how the word lobby was coined, because it is in that corridor that these negotiations were taking place. So lobbying then became, that corridor is a lobby, physically it's a lobby, but then lobbying became what is happening in that lobby. So it's never a crime to lobby. In fact, it's one of the reasons that countries have diplomatic missions with each other. So the foreign diplomatic missions here in Nigeria are here to lobby the Nigerian government on behalf of their own government. And so international companies, the multinationals, they have teams of lobbyists who are in the countries where they have interest to negotiate favors from the governments in power. And it's not only a Nigerian and African thing. It is the same if you go to the United States Congress, if you go to Germany, France, everywhere of the developed nations, you have this lobbying. The question is, lobbying for what? So if it is lobbying for the interest of the host country and the foreign company or country is okay. But if it is against the interest of the host country or even of the foreign country, then it's a problem. And again, this is where we want responsibility on the side of the leaders. So definitely, these people are going to lobby you. You have most of the international companies in Nigeria, their chairmen or CEOs have specific goals to ensure good relationship with the governments in Nigeria at all levels, so that the interests, their own economic interests, are not jeopardized. So the question is that we expect accountability from our leaders, that in the myriad of this lobbying, let the interest of the Nigerian people be paramount. That should be the first thing. If it is to the interest of the people, can go ahead with it. If it is against the interest of the people, don't go ahead with it.
Indeed. Now, let me ask about new developments. Things are constantly changing. We have artificial intelligence and all of that.
Yeah.
In this new world, do you see FDI also taking a new shape in terms of, these aspects, technology that doesn't have, physical boundaries and all of that? Do you see anything changing like that? Basically, what are also the new developments when it comes to FDI that you can tell us about?
Yeah, so definitely that is a new frontier that will attract FDI, the AI and technological improvements and all of that. But we must not forget that, for instance, what is happening in the US now? The US basically abandoned manufacturing. So they didn't have factories as they used to have them again. Instead, manufacturing moved east to Asia, particularly China. So China, Taiwan, the South Korea, all of those, Vietnam and all of that became the manufacturing hubs where physically work is being done to produce goods and then send them over to the US. Donald Trump's idea is that no, we need to bring that manufacturing back to the US. But perhaps the mistake he's making is that, just like you have said, the US have moved from physical manufacturing to the manufacturing of technology, of which AI is one of them. So the US is now more into services, more into technology and things like that. So even if you bring manufacturing back to the US, how many people are willing to go into the factory and be carrying produce goods and be putting them in that kind of physical work that used to happen in a factory? How many Americans are ready to do that? So FDI is being attracted in all the ways. So in China or Vietnam or in Bangladesh, India, those countries where manufacturing is really happening, you expect FDI to be coming into the manufacturing sector. And then in places like the US and the UK, and then maybe like South Africa and some of the African nations, where technology is the one that is actually the main thing, you expect FDI to be coming into the technological space.
Yeah.
And that is why for us in Nigeria, we want the government to open up the space. We have a virgin economy. We have what it takes to attract foreign direct investment, but there are impediments, and we can speak about them, which are stopping us to receiving the quantum of investment that we should be rightly receiving.
Thank you so much, Mr. Nick. It's been an interesting one, and FDI has been successfully untangled by you. Thanks so much for coming.
Thank you so much.
All right. So that's how we end the program for today. I do hope you've taken one or two notes about what foreign direct investment is. And as a person, a citizen, the concerns you may have, you do know now better about what they could possibly be about companies, organizations moving into your country and doing their best. Jobs will be created, or are there other underlying issues? These are the things we've discussed, and I do hope you've understood them and will make actions with them. Thank you so much. Join us next time on Untangle. For now, I remain Amadi Nobewe. Bye.